Hey, this is your good friend and realtor and your good friend and CPA. In this video, I'm your good friend and CPA, and I want to talk to you briefly about an offer in compromise. Now, for those of you who have IRS debt, you basically owe back taxes, there's an option for you. So let's say that somebody owed $5,000 to the IRS, okay? You've been paying, you're working out a payment plan, but you know you owe $5,000 worth of taxes. You've already figured it out properly. You're sure that you have this tax liability. What you can do is you can file an offer in compromise, and basically what that is you're saying, listen, I owe you $5,000, but I'd like to pay you $3,000 right now and just wipe our hands of this. Now, this doesn't affect your credit. As long as you pay them, it's not going to affect your credit. If you don't pay them, liens and other bad things can happen. But the way it works essentially is there's a $150 fee. You file a form 656A. The instructions are 656B, but the form is 656A for an offer in compromise. Essentially, it's a financial statement, and it's stating the reasons why it would be better and beneficial to both the government and to you to settle the debt for less than what you owe. So in the example of somebody that owed $5,000, you owe this $5,000, but you want to say, because of the recession, because of this or because of that, I'm cash poor, and if you try to collect over a number of years the way our existing payment plan is, it's going to take forever. I'll give you $3,000 instead of $5,000 right now. So the way you would file that is you would take your form 656A. It costs $150. Now, that $150 for the IRS to look at this form for you is non-refundable, so you're not going to get that money back. Next, you'll have to attach 20% of the payment. So in this example, you owed $5,000. You decided to offer in compromise of $3,000. You would have to include a form 656A, $150 application fee, and 20% of $3,000, which is $600. I don't know why I didn't do that in my head. It's probably because it's almost 11 o'clock at night, and I don't know if you know any other accountants. We can't seem to do math after a certain point at night. It's weird. Anyway, so you send in that $600 plus your $150 application fee. Now, here's the best thing about this offer in compromise. Best case scenario, the IRS says, okay, you owed $5,000. We're going to allow you to pay $3,000, and we already have $600 of this $3,000. Within the next 5 months, you need to pay us $2,400, and now we wipe our hands of it, and you're good. You don't owe us any more money. But that $150 is ours. Okay, so they apply your payment to your new amount due, and then you have 5 months from when they accept it to pay it. That's the best case scenario. The worst case scenario is you lose $150. You now know what the IRS won't accept, and you've just made a $600 payment on your $5,000. So now you only owe $4,400, which is still a sign of good faith, right? You owe less than you did before, so it's really a good idea. Again, offer in compromise. For those of you who owe tax debts, you have outstanding tax liability, and you're sure that you actually owe this liability, offer in compromise is a good idea for you. Again, the instructions are form 656B, and the offer in compromise is 656A. All right. If you have a more specific question about yourself, please email me. All my information will be at the end of this video. All right. Take care and God bless everybody.